This is our group presentation given by group number 7, and our group members are
Ryan Fates,
Corey Hibbard,
Roland Murillo,
Erica Hibbard,
and Yordanos Mulatu.
Some of the recent happenings that have been going on with the equity markets have been an Asian companies, including some involved in jumbo debt-laden deals over the past year, are now looking to extract some cash from equity markets and pay off some of their debt. In recent years, low interest rates across Asia, with the exception of China, helped a number of companies finance big acquisitions. Both U.S. Federal Reserve now winding down its monetary stimulus and interest rates expecting to rise, companies are more likely to list acquired assets than to refinance debt by taking out bank loans or issuing bonds. The biggest equity fundraising in the works is the U.S. $5 billion Hong Kong initial public offering planned by WH Group, the China-based pork producer that last year bought U.S.-based Smithfield Foods Incorporated in the biggest ever Chinese acquisition of a U.S. asset. WH Group will use the most of the proceeds raised from the IPO, which is expected to take place in the first half of this year, to repay the debt used to buy Smithfield. People familiar with the situation said earlier. The recent happenings with convertible and debt financings, as you all may know, Facebook has recently acquired the WhatsApp. But another thing that's just recently happened in the past week, an oil and gas business launched in April by former Chesapeake Energy Corp. Chief Executive Aubrey McClendon has quickly achieved a $5 billion equity valuation according to the terms of convertible bonds that it said this week it had sold. The firm has raised about $2 billion in equity, including the $750 million convertible bond, giving its investors a $3 billion for profit in less than a year. Some of the recent developments in merger markets: Office Depot current stock is at negative 8.79, and it expects its sales to decline this year, pointing to challenging trends across the product lines and integration-related moves tied to its merger with Office Max. The office supply retailer rivals completed their merger in November, a deal meant to improve their prospects in an oversaturated office supply sector that faces stiff competition from companies such as Amazon, but expenses tied to that deal contributed to Tuesday's sharply wider fourth quarter loss. In addition to integration challenges, the new Office Depot also faces broader industry issues such as heightened competition from online sellers and a shift in the use of office technology that put pressure on sales.
I'm going to talk about some of the recent economic conditions of the United States. Today we are recovering from the recession, but not quite as quickly as we hoped it would. A bounce back after a recession would be in the shape of a V. Right now we're bouncing back in the shape of an L, so not quite as fast, but we're still on the upward rise. There's a 2% growth rate, which is good for the United States. However, it's not lowering the unemployment rate. It's keeping it level with how it is right now. This is enough to balance out the flow of the people coming into the job market, but it's not creating more jobs, which leaves the unemployment rate the same. The value of the stock market is increasing. The richest 10% of households hold 80% of the value of the markets. Because of this, the value of the stock market is increasing. S&P 500 stock is up 57%, but what is lacking is that the median household income is down 5%. Continuing the economic conditions, right now minimum wage is being discussed of rising to $10 an hour. This graph kind of shows where minimum wage has been. In 1968, minimum wage was $1.60, but in today's dollars that would be $10.71. Some argue that by increasing the minimum wage, it would lift 900,000 out of poverty, but it could also result in the loss of 500,000 jobs. One of these reasons for job loss would be because it increased payroll costs, and some employers cannot afford to pay employees $10 an hour. Talking about accounting developments impacting the market, GAAP stands for Generally Accepted Accounting Principles. IFRS stands for International Financial Reporting Standards. There's pressure on the U.S. to eliminate the gap between these two. If the gap was eliminated, there would be a reduction in costs for foreign exchange and stock markets. The quality of international accounting standards would increase because they would be more similar between accounting and the international standards. Because of this, markets would be able to compete internationally for global investment opportunities. If these were put, it would increase the capital flow, which is the movement of money for business production. It would also increase international investments, which would lead to a higher economic growth. New safeguards will be in place to prevent another national or international economic meltdown, and it would help the securities market continue to grow.
So now let's talk about important news regarding investment banking firms. The real-life Bank of America Junior Banker. This week, Bank of America joined Goldman Sachs and JP Morgan Chase in limiting the hours worked for junior bankers following the death of a 21-year-old intern in London. One Bank of America analyst stated that while working until 2 a.m. and working on weekends isn't unusual, many junior bankers accept the offer knowing they will gain valuable experience and prestige from firms. Now let's talk about the selling of the Kazakhstan bank. HSBC is selling Kazakhstan Bank for $176 million. The deal expected to complete on the fourth quarter is based on a net asset value of $160 million. Now let's talk about news regarding Wall Street. Some of the financial firms agreed to stop participating in some surveys. JP Morgan Chase & Co. and Goldman Sachs Group Inc. were among the 18 financial firms that agreed to stop participating in some of the surveys of analysis system, while New York Investment early access to the information. The firm will stop answering analyst surveys by certain clients seeking to use information for trading. Let's talk a little bit about new products and services introduced by investment banks. Bank of America Merrill Lynch, a lender in global transaction services, announced the launching of new capabilities available in corporate clients doing business in Brazil. This solution will help optimize their excess cash and working capital. Talking about online investment and how that's influencing investment banks. In less than 8 weeks, Alibaba Money Market Fund has attracted 400 billion yen in asset management. Although this amount of money that they have attracted is not substantial, it is very significant in towards the speed at which they have grown.
As for news and conditions in the current global market, on Monday, the 24th, the euro rose against the dollar to $1.37. This rise is largely being attributed to the results of the closely watched German IFO survey, which beat expectations. The yen also climbed against the dollar as investors sought safe havens after a fall in Asian stock markets, as well as continued economic troubles in China, including soft housing data. The dollar, which had already hit a 2-month low of 100.755 yen earlier this month, dropped still further to 102.33 yen. Against a basket of major currencies, however, the dollar gained 0.1% to 80.288. And last week, the dollar index posted its first weekly gain in 3 weeks. This is largely regarded as a result of the Federal Reserve's announcing that the U.S. central bank's plan to reduce its monthly asset purchases remained intact. In other global news, data released Monday showed that the rise in home prices in China eased for the first time in 14 months. This raises fresh concerns over the health of an economy that has been a key driver for global growth in years. Uncertainty over China is stoking worries about a faster than projected slowdown in its massive economy, and it's dovetailing with political worries in other big emerging markets like Ukraine, Thailand, Nigeria, and Turkey. The U.S. Federal Reserve has also continued to scale back its huge bond buying stimulus. The mix of a troubled China economy as well as the continued scaling back of bond buying by the Fed has resulted in a relative flight to safety by investors and has seen over $38 billion pulled out of emerging markets over the last 17 weeks and $44.2 billion put into developed market equity funds since the start of the year.
Hedge fund and LBO developments recently is Blue Harbor Activist Fund has privately listed Tribune Company to sell its real estate holdings. The Blue Harbor Group actually currently holds a 2.5% stake in the Tribune. They are a friendly activist. Mr. Robbins is the owner of Blue Harbor Group, and they are currently trying to convince Tribune to sell its holdings and the Spectrum broadcast property zone because it believes it can create more value to the shareholders, which would increase value of the stock price. An LBO development recently is Citigroup, Morgan Stanley, Bank of America could earn up to $200 million in fees from the bankruptcy of Energy Future Holdings. Energy Future Holdings is part of the biggest LBO transaction, which was $45 billion back in 2007. Citigroup and Morgan Stanley were part of the financing to help the LBO transaction take place, and now they are currently going to make up to $200 million in fees with the bankruptcy. Hedge fund Starboard Value Activist Hedge Fund is going to launch a plan to have shareholders tell Darden not to spin off Red Lobster unless the shareholders get to vote on the decision. Starboard Value is a hedge fund that currently holds a 5.5% stake and must win the support of the shareholders in the next 60 days to hold a special meeting to stop the Darden from spinning off Red Lobster.